Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 14th of March, 2024. This is episode number 2636. Please remember that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. What's going on today? Really, the main piece here is that we have the U.S. PPI data came out. We'll go over that in a second. News flow from yesterday's close. U.S. Treasury Secretary Yellen says that it is unlikely that interest rates will go down to pre-COVID levels. Fisker, which is an electrical vehicle manufacturer, has been around for a bit, has some cool looking cars actually, is mulling bankruptcy filing. ECB's not expects first rate cut in June, expects two more in September and December. U.S. PPI comes in hotter at 0.6% versus 0.3%, pretty hot. Retail sales came in slightly weaker. Core PPI came in at 0.3 versus 0.2. So in line with CPI, inflation data is a little bit hot. Initial claims were soft this morning. Initial claims came in at 209, was it? Yep, 209 versus 218,000. And then the other thing you should know is that the pace of the roll, where is that graph? Pace of the roll is such that the S&P is about 95% done at this point. Here it is. So if we look at the pace of the roll here, we see that we're at 75% of 78% or 79%. So that gives us completion of about 95%. So we can start leaning on the cumulative delta numbers and things like that. We still have hedges that are going to go off. Still have hedges that are going to be taking place, delta as well as gamma hedges through expiration tomorrow, and then this roll is behind us, thank God. Generally, roll week is full of chop, and it's just very usually a pretty difficult market to trade. So that's that. So you got the news from this morning. We have business inventories at 10. We have the house price index out of China this evening at 9:30. Otherwise, pretty quiet. See if there are any auctions. We have bill auction, 4-week, 8-week bill auctions, 15-year mortgage rate, 30-year mortgage rate. The auctions will be at 11:30 for those of you who trade treasuries, and then the mortgage rates will come out at 12 p.m. And then we have ECB's Guindos at 2 p.m. Nothing really important. The S&P this morning is a multi-distribution profile or auction. Clearly, the market's in price discovery mode. The volume's pretty elevated, but then again, we have the expiration going on, so volumes are expected to be elevated. 203,000. 97% of the inventory is long, and the range is 19 points. The range is right next to the mode. The mode is right there. The mode, for those of you who haven't studied statistics, mode is the most prevalent quantity in the sample. So that means that 20 points for an overnight range shows up more often than all other values within that data set. Let's take a look at the charts. Yesterday I talked about how this is consolidating right up against highs. This is really gearing up. Overall, it's very, very much gearing up to push higher. So the expectation is that a dip down would be looking, or be looking for a chance to buy. That turned out to be completely not what the market was intending, because yesterday we basically fell off. We basically fell off this consolidation zone right here. You can see that it's just pretty darn dead. Very, very obvious balance. And then when we opened with the open as the high price. This is always an indication to be cautious on the long side. And then all we did was surf underneath the VWAP before it just consolidated. We ended up with pretty much a balanced profile yesterday. We managed to push the IB high, and then later on, I didn't see any news or any reason for it, but we had this splash down at about 2:17 my time right here, 2:16:17 my time. We had a very quick splash down. Looks like a disruption. Looks almost like a news event. If anybody knows what that is, no idea. I looked around and didn't see anything that stood out to me. But it splashed down, and then it basically gave us a neutral day. So we broke the IB high, we broke the IB low, and we ended up with a neutral normal day with settlement inside of the IB. Overall, however, the market is just in balance. But the important thing to note is that it is balancing at highs. It's balancing at highs. And so my view, again, is that the high from a couple of days ago is vulnerable. So 52, 57 and a quarter still a target. I'm expecting the market to walk itself up through there. It just has not pulled back as much as it tried yesterday. It left an excess low with a relatively balanced profile. I expect this to push higher. So that's the S&P. Not sure how this is going to play out this morning. I mean, we're sitting with the point of control above us with VWAP mid on top of each other, right in the open area from yesterday. It doesn't look so great. This is the time where I just look to crude. I look to something that isn't rolling. Stay away from NQES. Look to crude. Look to gold. Gold had some really decent movement yesterday. But, to try to trade what the ES has to offer right now is pretty tough. And I know many of you are very focused and stuck on the ES, and that's okay too. This just would qualify as a time to just be patient and just sit a lot of moves out. I just don't feel like it's yielding too much in terms of opportunity. I mean, what I see on the PNF chart, just bar after bar after bar overlapping like this, it doesn't give me very much to trade on. This might have been a spike retest fail kind of setup, but there was no pullback, and there wasn't really a good coil to trade long off of back to mid. It went to mid on the dot, and it just got sandwiched between mid and the IB low. But overall, the quality of the setups this week have been quite poor, but that's no surprise. My performance stats from way back show that this is a great week for me to be in Mexico on a beach somewhere. Just rollover is a great time for me to be off. That's always been a net positive for me to do that, and a net negative for me to sit in front of the market and to try to trade it. The NASDAQ, same story. The NASDAQ, we talked about it pulling back a little bit, showing a lot of weakness, and it did. The NASDAQ had its open against the IB as well, so all indications early on in NASDAQs to stay on the short side. These kind of whipsaws, same thing. There was a big drop here Still not sure what that is. Uh, so in general, the NASDAQ's doing the same thing. It's kind of hovering on a weaker basis. It's still hovering around all-time highs. It's not moved away from the all-time high. You can see here, big run up from last year, and we are consolidating in this gap range. Let's put a profile around it to see where the true balance is. Expect it to be right here. Yeah, so the point of control, 18,260. The secondary high volume node is at 18,550. And we are basically holding on to the lower distribution. The NASDAQ just doesn't look very strong. Crude, on the other hand, crude popping into the 80s here. Crude getting a lot of news recently. Russian energy minister says expects Russian crude oil exports to rise due to unplanned maintenance at refineries, according to Interfax. I think this is incorrect in that it's saying it expects crude exports to rise. Crude exports to rise because the refineries are down, so they're exporting it instead of refining it. But overall, this is an issue with supply, with what's going on in Yemen, and so on and so forth. And we've tried again and again to get and hold through the 80, and now it's successfully doing so. Put in a higher low, is expected down at 76, did not make it. And then since then, we've established one-time framing up yesterday, and we're gapping up today. So crude, no shorts today. I don't have anything more than that. There's nothing really fantastic going on anywhere. We talked about the 10-year yesterday. A 10-year has a gap. Talked about this gap yesterday, and that is very likely to fill it in. It did this morning. It had a double TPO low this morning, and it's extending lower. B bracket extending over A bracket in the treasuries and cleaning up this weak structure. So the treasuries are likely to come down into this acceptance zone down here, trading in the 110 kind of 110.12 handle or so. It had a really interesting day last week, and since then you could see that it's leaving tails. Yesterday was completely balanced again, same as the S&P, just very, very choppy. Today looks more like it's likely to trend. We'll see how that goes. Watch your risk. Tomorrow's Triple Witching Friday. We have expiration for many products at 8:30 Central, 9:30 Eastern, right at the cash open. And we have a bunch of products expiring at 3 p.m. Central, 4 p.m. Eastern. Once this week is behind us, next week we get the Fed decision and the roll behind us, and things should be a little bit clearer. Good luck today, and I'll catch you tomorrow morning. Take care.